Hey, in this video, we are going to talk about the top 5 penny stocks to invest in. So before starting this video, please like this video and subscribe to our channel for future updates. Let's start the video. The majority of penny stocks, which are defined as securities that trade for less than $5 per share, have had a terrible year. Although a few stocks have outperformed, overall perception towards investing in penny stocks has been negative. This persistent lack of interest in penny stocks can be attributed to macro uncertainties like inflation, supply-demand imbalances, and rising interest rates. Investors are wary of investing in these securities since they are often riskier and more volatile than large-cap equities, such as Apple Inc., Colgate-Palmolive Company, and Amazon.com. Incorporated, this implies that their price fluctuations, both up and down, can be far more extreme. A recent Bloomberg survey reveals that the 10% gain which is predicted for stocks in 2023 would fall short of previous market rebounds. It is predicted that the economy is not going to be able to see a sustained expansion continue into 2023. Meanwhile, heading into 2023, some analysts see potential opportunities in high-quality U.S. large-cap equities with dividend payments that have consistently increased over time. However, it is important to note that the recovery momentum of the market is going to open a lot of opportunities for growth in the coming months. As retail traders return to the market, it is expected that penny stocks will witness a surge in volume as a result. A Morgan Stanley report from last year outlined that these traders account for nearly 10% of the daily trading volume on the Russell 3000, the broadest stock index in the U.S. In 2021, stocks popular with retail traders in the U.S. outperformed the benchmark S&P 500. Penny trades on the whole remained loaded with risk. Despite the risks, we anticipate a turnaround in the penny stock market in the near future. The U.S. Federal Reserve is likely to implement expansionary measures as the economy recovers from its peak inflation, which might lead to a surge in penny stock prices. Therefore, we have put together a list of some of the best penny stocks to buy now that have the potential for development due to solid business fundamentals and growth catalysts. Number 1. Muscle Maker Incorporated. Muscle Maker Incorporated is a restaurant chain. The company sells salads, sandwiches, drinks, pastas, snacks, and meals to customers in the United States. This December, Pokemoto, the developing Hawaiian poke bowl restaurant concept by Muscle Maker Incorporated, announced the signing of its first franchise contract in Northern California. With this agreement, the brand will expand its market reach to 16 states. The Sonoma and Marin counties will be the main focus of the franchise agreement in Northern California. At the close of the third quarter of 2022, one hedge fund held stakes in Muscle Maker Incorporated. The total value of these stakes amounted to $98,000. Unlike big companies like Apple Inc., Colgate-Palmolive Company, and Amazon.com, Incorporated Muscle Maker Incorporated is one of the riskier investments available, particularly given the current market climate. However, the future benefits could be substantial. Number 2. Sunworks Incorporated. Sunworks Incorporated, one of the finest penny stocks to buy now, offers services for the development and operation of solar energy plants. As of December 20, the stock is trading at $2.10 a share. On November 8, Sunworks Incorporated posted earnings for the third quarter of 2022. The revenue over the period was $40.71 million, up 30.4% compared to the revenue over the same period last year. The company had $14.5 million in cash at the conclusion of the third quarter to fund its continued expansion. Analysts like the stock. On December 12, EF Hutton analyst Tim Moore took coverage of Sunworks Incorporated with a buy rating and a $5 price target. The analyst noted that the company's acquisition of Solcius, a solar energy company in Provo, Utah, reduced its dependency on agriculture end markets and vastly increased its sales to more lucrative residential consumers. 5 hedge funds in Insider Monkey's database had Sunworks Incorporated in a bullish position at the end of the third quarter of 2022. These hedge funds held shares in the firm worth about $2.5 million. Citadel Investment Group, with a position worth $1.3 million, stood as the most significant shareholder of Sunworks, Incorporated. Number 3. Bionano Genomics, Incorporated. Bionano Genomics, Incorporated, based in San Diego, California, provides a platform to analyze the long segments of genomic DNA. The company is one of the finest penny stocks to buy now and is trading at $1.80 per share as of December 20. On November 23, Bionano Genomics, Incorporated disclosed that it has reached an agreement to pay $64 million to acquire Purigen Biosystems, a biotechnology company. This acquisition is anticipated to increase the company's sample preparation portfolio capabilities to create an end-to-end solution for the adoption of optical genome mapping, OGM. This December, BTIG analyst Mark Massaro started coverage of Bionano Genomics, Incorporated, with a buy rating and a $3.50 price target. According to the analyst, the company provides a sophisticated approach to precisely identify structural variation and changes in chromosomes. By the end of the third quarter, Bionano Genomics, Incorporated was part of 7 hedge fund portfolios. The consolidated stakes these funds had in the company were worth $5.5 million, down from $7.9 million the prior quarter. Number 4. Sorrento Therapeutics, Incorporated. Sorrento Therapeutics, Incorporated, a biopharmaceutical company, is one of the best penny stocks to buy now. This December, Sorrento Therapeutics announced that the U.S. Food and Drug Administration, FDA, has given the company permission to begin clinical trials with its next-generation mRNA vaccine against Omicron variants. On November 2, Cantor Fitzgerald analyst Brandon Folkes started coverage of Sorrento Therapeutics, Incorporated, with an overweight rating and a $5 price target. The analyst noted that the company has the capacity to produce numerous best-in-class products in the fields of oncology, pain, and infectious diseases. D.E. Shaw owned roughly $7.9 million worth of stakes in Sorrento Therapeutics, Incorporated, becoming the company's leading stakeholder in Q3 2022. Overall, 10 hedge funds tracked by Insider Monkey owned stakes in the company in Q3, growing from 6 in the previous quarter. These stakes hold a combined value of over $13.9 million. Number 5. Ring Energy, Incorporated. Ring Energy, Incorporated is an oil and natural gas exploration and production company. The company currently operates in the Permian and Mid-Continent regions of the United States. It is one of the premier penny stocks to buy now. In November, Ring Energy, Incorporated posted earnings for the third quarter of 2022, reporting an EPS of $0.28, beating market estimates by $0.04. The revenue over the period was $94.4 million, up 91.2% compared to the revenue over the same period last year. Two Sigma advisors own roughly $4.1 million worth of stakes in Ring Energy, Incorporated, becoming the company's leading stakeholder in Q3 2022. Overall, 10 hedge funds tracked by Insider Monkey own stakes in the company in Q3, growing from 9 in the previous quarter. These stakes hold a combined value of over $12.2 million. Advantages of investing in penny stocks. Potential for high returns. Most penny stocks have tiny market capitalizations, meaning it takes a small amount of money to move their share price substantially. Therefore, positive news, such as signing on a major customer or forming a new strategic alliance, can lead to sizable returns before the mainstream investing world discovers the stock. Conversely, negative news can lead to significant losses. Leverage. Penny stocks attract investors with a small amount of trading capital, as their lower share prices allow them to buy thousands of shares. For example, if an investor has $500 to invest, they can purchase 2,000 shares of a penny stock trading at 25 cents. If that stock doubles over a month, the investor makes a quick 100% return on their investment. However, with the same starting capital, the investor could afford only a small number of shares in most S&P 500 stocks, making it almost impossible to achieve those gains over the same period. Risks of investing in penny stocks. Low liquidity. Penny stocks often trade on thin volume, meaning it can be difficult for investors to enter and exit their positions. Moreover, These stocks typically have a wide spread between the bid and ask, which increases trading costs. For example, if a penny stock has a bid price of $1 and an ask price of $1.50, a trader wanting to buy at market gets caught paying a 50-cent per share premium. Therefore, investors should use limit orders to minimize trading costs when buying and selling penny stocks. Extreme valuations. Penny stocks that start moving rapidly higher in price show up on stock screeners and may even get media attention. This often attracts more speculators who push prices up even higher, leading to unsustainable valuations. For instance, during the dot-com bubble in the late 1990s, many penny technology stocks doubled and tripled in price despite not generating any earnings. However, when the market turned bearish a few years later, many NASDAQ-listed penny stocks with unsustainable valuations fell substantially or were delisted. If you love similar content like this, take a look at my other videos. And if you like it, please smash the like button. If you have further questions, feel free to comment down below. See you in the next video.